Hey everybody, it's Ryan from Tempedino Insurance here to talk to you guys a bit today about your homeowners insurance and different things that it may cover. Especially this time of year, we're getting into spring, we're getting into fun time outside with the families. Maybe your kids will be playing in the yard, maybe be having a barbecue, stuff like that. So when it comes to your homeowners insurance, there are obviously different levels of coverage, different portions of coverage that cover different things. One of the things that we need to really pay attention to is the other structures coverage. Now, by default, your homeowners insurance will cover a percentage of your coverage A, or your dwelling amount, the amount they're covering your home for. So your homeowners insurance has a portion called other structures. Now that would cover anything that's not attached to the home in most cases. So if you had like a tool shed, a gazebo, maybe you have a detached garage, or a pole barn. Some houses have some people have pole barns to keep some either farm animals or equipment in. That would be your other structures coverage. Now we're going to talk really about that today. If you have a pole barn, they could be upwards of $5,000 to $10,000, even $15,000 to $20,000. If you have that plus a tool shed and some additional things in the yard, maybe you have a deck, like a gazebo that's lifted up maybe, or something like that, you need to make sure that you have the right coverages for that. Now, like I said before, by default, your homeowner's insurance coverage gives you a percentage of coverage A. In most cases, other structures will be somewhere around 10%. So if you have a $200,000 home, you get 10% of coverage A, you get $20,000 on the other structures. So, that may not be enough if you have a pole barn plus a deck, something like that. If you have an above ground pool with a deck attached, that would be other structures on your property. So you need to make sure that you have enough coverage there. You can always ask your insurance agent to review your coverages for you and ask them, is this enough to cover the expenses I will have if I incur a loss? Hurricane season's coming. It's one of the things people don't really think about. They figure, oh, I got homeowners insurance, everything will be covered. Well, if your tool shed gets blown off, the roof gets blown off, or it gets knocked off of its pedestal, or if siding rips off, if you have one of the nice sheds with the nice siding on the side of it, and if that gets blown off, that's other structures. That's not covered under your homeowner's insurance. So you need to make sure you have enough coverage there. And for the most part, your deductible will apply. So, if you have a $1,000 deductible for wind and hail or hurricane, your deductible for $1,000 will apply to the repair of your other structures on the property. Another coverage that's very important, especially now with hurricane season. On the East Coast, we took a real bad hit with Hurricane Sandy. There was a lot of flooding. There was a lot of damages to homes, straight line wind damages that were detrimental to homes. I mean, they really were damaging, and people were displaced. They weren't able to live in their homes because half the siding was gone. Maybe something blew into the house or something. So the other structures coverage, I'm sorry, not the other structures. The loss of use coverage is another important part of your policy. Now again, that coverage is usually dictated by the dwelling amount. So if you have a $200,000 home, usually the loss of use coverage is usually 20% of coverage A. So again, on a $200,000 home, that's about $40,000. And that basically will be used to put you up someplace to live while your home is being repaired if it's unlivable or unsafe to live in it while they're doing the repairs. So now, if people say $40,000 is not really a lot of money. Some policies actually say actual loss sustained. There's always a dollar amount associated with it. For the most part, if it's the standard 20%, that's plenty of money. You're going to put you up in a hotel or motel. Just assume that you have your home's going to be long-term damage, long-term repair. $40,000 at roughly, just say to rent the house for you is going to be $1,500 a month. I mean, that's like 30 months or something like that. I mean, I don't have a calculator on me. I'm not going to do the math for you, but that's a lot of money. That's a long time. And if you can't get your house fixed in, within a year, I mean, within 30 months, I mean, you really need to get some new contractors. I mean, that's my personal opinion. I mean, I don't really know, a lot about the construction end of things, but I would imagine that to rehab a home shouldn't take more than 6 to 8 months. But the coverage is there, they're percentages of coverage A. You can increase those coverages, and there will be an increase in premium for you. But for the most part, the default coverages that are usually assigned on these policies is ample. I rarely see anybody increase anything. The only one or two times I did see somebody increase something, as far as my own customers go, is the other structures. I had somebody increase it about $30,000 because they did have a pole barn and a detached garage and a deck. So they needed some additional coverages there, and they felt comfortable with where they were. There's a lot of stuff to think about when we're coming into the spring and summer months. Like I said, hurricane season is coming. It is a great time to review your deductibles for your homeowners insurance. A lot of policies, especially if you have an older policy that you've had for maybe 7 or 8 years, a lot of the older policies have what's called a hurricane deductible. And those deductibles are very misleading when you look at them on paper. For the most part, the hurricane deductible will say, sometimes will say a 2% or 3% or 5%. Sometimes they even say 1%. And then sometimes they'll give you a dollar amount next to it, like $13,000 or $15,000. So most consumers, most homeowners will look at that and say, oh, well, it's like 1% of this damage, right? If the damage is this, it's 1%. Well, no, it's actually 1% of your coverage amount, or 5% of your coverage amount for the home. So if you have a $270,000 replacement cost on your home, and you have a 5% wind and hail deductible, that's 5% of $275,000. That's what your hurricane deductible is. Now, if you blow $10,000 in siding and roofing off the house in a hurricane, your deductible is well over $10,000. You're paying for that entire damage, that entire claim out of your own pocket. So it's very important for you to review your insurance policy, review your deductibles. Springtime is the perfect time to do it. You hear people talking about spring cleaning all the time. Well, now's the time to spring clean your insurance portfolio. Now, if you call your insurance agent and ask them for a review of your current policies, maybe your deductibles, and they come back and say, listen, this is the best we have, you have a 3% wind and hail deductible, I urge you by all means to contact another insurance agent. You can inbox me, you can message me, you can call me in my office at 609-910-0193. You can email me, message me here on Facebook. I'm happy to give you a complimentary insurance review. I'll look over your policy for you. I'll ask you some questions about your home, and I'll tell you whether or not, based on some criteria we have in the office, if your home is insured properly, underinsured, overinsured possibly, and I can even offer you solutions on lower deductibles for your insurance. So don't be one of these people that are caught up if a 5% hurricane deductible or wind deductible. You take a $10,000 loss, your deductible is $13,000 or $14,000. You're paying for that out of pocket. That's not why you have insurance. You have insurance to help you out in the time of a loss, so you don't have to pay those large premiums, those large amounts for those deductibles. Okay, and the same goes for your flood insurance. If you live on the coast, a very popular way of reducing your flood insurance premium on a FEMA policy is to go for the higher deductibles. I had a customer of mine who brought their homeowners insurance to me. I wrote it, and then when it came time for their flood insurance, I reviewed that for them. And when I was reviewing it, I said, wow, you have a really nice premium. However, the reason why he had a nice premium was because his deductible was almost $10,000. So luckily he had no damage from Sandy. Otherwise he would definitely had a very big problem there, because his deductible would have been $10,000 to fix the damages in his home, and that would have been something he would have had to have covered out of his own pocket. Now, some of you may be well off out there. 10 grand, that's nothing, that's not a problem. Well, let me tell you, you don't never know what it's going to be like at the time of a loss, if you're going to need a lower deductible, or you might need that cash to live on. You might have lost everything. So anyway, that's my quick video for today on insurance and your deductibles. If you want me to take a look at your insurance, inbox me, message me, give me a call. I'm happy to look at it for you. I'll put a link below to my contact information. Take care, everybody. Have a great weekend.